Okay, in this video, we continue our discussion of AUC Section 260 for communications with those charged with governance. And in the last video, we discussed who those charged with governance are. And in this video, we'll discuss what exactly we need to communicate to them. And so there's three different scenarios that we need to communicate to those charged with governance. The first is that we need to communicate our responsibilities with regard to the audit. We also need to communicate our plan, scope, and timing of the audit. And we also need to communicate our significant findings or issues as a result of the audit. And so these first two are typically communicated in the engagement letter or at the beginning of the audit, and significant findings or issues are communicated in a separate letter at the end of the audit that we usually call the governance letter. So we'll go through each of these individually. So first, communicating our responsibilities with regard to the audit. It says that we should communicate with those charged with governance our responsibilities with regard to the financial statement audit, including our responsibility for forming and expressing an opinion about whether the financial statements have been prepared by management with the oversight of those charged with governance are prepared in all material respects in accordance with the applicable financial reporting framework. And so that's our overall responsibility of doing the audit, and we need to let governance know that that's our responsibility. We also need to communicate to them that the audit of the financial statements does not relieve management or those charged with governance of their responsibilities. So they need to be aware of both of these two things. And finally, we need to tell them at the beginning of the audit or rather an overview of our plan, scope, and timing of the audit. And both of these are usually included in the engagement letter. And we'll discuss these in a little more detail once we get to the explanatory material section, but let's continue on here of what we communicate at the end of the audit, and that is our significant financial issues that we found. So it says we should communicate with those charged with governance our views about qualitative aspects of the entity's significant accounting principles, including accounting policies, accounting estimates, and financial statement disclosures. And so when applicable, we should explain to those charged with governance why we consider significant accounting practice that is acceptable under the applicable financial reporting framework not to be most appropriate to the particular circumstances of the entity. And we should also determine that those charged with governance are informed about the process used by management in formulating really complicated accounting estimates, including fair value estimates, about the basis for the auditor's conclusions regarding the reasonableness of those estimates. So in our governance letter, we'll usually have a section that says here's the entity's most important accounting policies and practices, and here's the most important estimates, and then we tell them whether we think those accounting policies and the determination of those estimates were appropriate. We also need to let them know any significant difficulties that we encountered in the audit. For instance, maybe we weren't able to get all the information that we would have liked to have gotten, or we had some disagreements with management about accounting policies possibly, so we would want to let governance know about that, and as well as the disagreements here with management. And we would also want to let them know the findings or issues that arose during the audit that are, in our professional judgment, significant and relevant for them to know and discharging their responsibilities and overseeing the financial reporting process. And next, we want to let them know about any uncorrected misstatements. So misstatements that we found or suspect in the financial statements that we did not correct because maybe they were immaterial or we didn't find that they were important. But we need to let governance know about those so they can determine or take that into account when they're discharging their responsibility. So we should communicate with those charged with governance uncorrected misstatements that we accumulated and the effect that they individually or in the aggregate may have had on our opinion and the auditor's report. And our communication should identify material uncorrected misstatements individually, and we should request that uncorrected misstatements be corrected. So if throughout our audit we found some material misstatements, then we would ask that management and those charged with governance give us permission to correct those in the financial statements. And any of the ones that we don't correct that we found or that are related to prior periods on the relevant classes of transactions, account balances, and the financial statements as a whole, we should communicate those as well. And typically in our audits, we are able to go ahead and correct those misstatements that we find. We usually don't find much of a battle in requesting that management correct those misstatements. And so usually when we're communicating with management, there may not be material uncorrected misstatements that we found. And also when not all of those charged with governance are involved in management, for instance, this is a large entity and the board of directors is separate from management, then we should communicate material corrected misstatements that were brought to our attention as a result of the audit procedures. We should communicate any significant findings or issues that arose from the audit. We should communicate our views about significant matters that were subject of our consultations with management and other accountants. And we should also communicate written representation that we requested from management. So if it turns out, usually if we correct misstatements within the financial statements, management knows about that from our requirements to communicate with management. But we also need to communicate with those charged with governance to say, hey, these are the misstatements that we corrected as a part of our audit procedures so that they're aware. And so we've got a lot of explanatory material about this here. It starts at A13 and goes through A33. So let's go through those sections now. Okay, so here we're in the explanatory material related to our communications that we need to make to those charged with governance. And it says our responsibilities with regard to financial statement audit are often included in the engagement letter, as we said before, or other suitable form of written agreement that documents the terms of the engagement. And so providing those charged with governance with a copy of that engagement letter or other suitable form of written agreement may be an appropriate way to communicate with them. And often we will have someone that is charged with governance to sign an engagement letter to prove that we've communicated those items to them. But the communications that could be included in that agreement are that we're responsible for performing the audit in accordance with GAS and what that means. We'd also communicate that audit of financial statements includes consideration of internal control as a basis for designing our procedures, but that doesn't come with us giving an opinion on the effectiveness of the internal control over financial reporting. It's merely a method for us to assess our risk that the financial statements are misstated. We also communicate that we're responsible for communicating significant matters related to the financial statement audit that are in our professional judgment relevant to those charged with governance responsibilities for overseeing the financial reporting process. And that GAS doesn't require us to design procedures for the purpose of identifying other matters to communicate with those charged with governance. And finally, when applicable, we might also communicate in the engagement letter that we're responsible for communicating particular matters required by law or regulation. That way they are aware of our responsibilities there. Next, we have some issues related to independence. As we know from other videos, GAS requires us to be independent for all audits. And so there may have been threats to our independence that we were able to reduce to an acceptable level in our independence assessment. So we might find it appropriate to communicate with those charged with governance some of those threats if we think that's appropriate in our professional judgment. So those threats might bear on our independence. And so we might let those charged with governance know our considerations that we're reaching our conclusions that we were not, our independence was not impaired. And that might be especially appropriate to communicate in circumstances where we're auditing a public interest entity, for instance, a government audit. And next, in situations where all of those members of governance, those charged with governance, are also members of management, we may find that our communications with management were enough to satisfy these requirements to communicate to those charged with governance, so we don't need to do it twice. And so if we have an engagement letter with management who are also members of those charged with governance, for instance, an owner, manager, potentially, then we don't need to have two separate letters or communicate with the owner, manager twice. And next, regarding our communications to those charged with governance about the plan, scope, and timing of the audit, we have a few additional details here to help us fulfill that responsibility. And so we want to be particularly sensitive about what we do tell those charged with governance, especially if they are members of management, about the scope and timing and the nature of our procedures. And we certainly would not want to tell them the detailed audit procedures that we anticipate performing, because then they might be able to fraudulently escape those misstatements in those sections, and if our procedures are too predictable. So we want to give kind of a high-level scope and timing of our audit and not necessarily a detailed outline plan of exactly what we intend to do. But the intent of this requirement to disclose our plan, scope, and timing of the audit allows those charged with governance to discuss issues of risk and materiality with us. It also allows them to understand better the consequences of our work and to identify any areas that they can request us to undertake additional procedures. For instance, if there's an area in the financial statements that they know is likely misstated, or if there's some kind of fraud that has occurred in that area, they can let us know to hone our procedures in that particular area for their purposes. It also allows them to better understand the entity and its environment, or better allows us as well. And so some of the things we might communicate to them about our plan, scope, and timing would be how we propose to address a significant risk of material misstatement, whether due to fraud or error, our approach to internal control relevant to the audit, including whether we express opinion on the effectiveness of internal control over financial reporting, or whether that's our assessment of internal control is merely a risk assessment process. We might also communicate to them our application of materiality in the context of the audit, and that'll be discussed further in AUC Section 320. We also might discuss with them the internal audit function and how we can use the work of internal audit to reduce the amount of procedures that we need to do, or how to join forces with internal audit to try to accomplish the same goal. And other planning matters that we might discuss with those charged with governance include the views that those charged with governance have about these matters. So their views about the appropriate persons and the entity's governance structure with whom to communicate. Like maybe there's a treasurer or a particular committee we should communicate with. Maybe also their views about the allocation of responsibilities between those charged with governance and management. The entity's objectives and strategies related to business risk that may result in material misstatements. So that would help us hone our procedures to those more risky areas. Also matters those charged with governance consider warranting particular attention during the audit. In any areas for which they request additional procedures be undertaken. Significant communications with regulators that might be helpful for us in assessing non-compliance. And also other matters that those charged with governance believe are relevant to the audit of the financial statement. So communicating with management about all these things would help us in planning the scope of our procedures. Some other things that we might communicate with those charged with governance are the attitudes, awareness, and actions concerning the entity's internal control and its importance to the entity, and the detection of possibility of fraud. We might also communicate the actions of those charged with governance in response to developments in law, accounting standards, or corporate governance practices, and also actions that those charged with governance had in response to previous communications with the auditor. So all these things would help us in developing our audit plan. And so even though these things would help us develop our plan, it really doesn't escape our responsibility to establish the overall audit strategy and the audit plan, including the nature, timing, and extent of procedures. So we can't just take the suggestions from those charged with governance about how to do our audit. We need to form our own plan. And finally, at the end of the audit, we need to communicate significant findings that we had. So as we discussed previously, this is usually in a letter that we send to those charged with governance after the audit. And we may even have a meeting with those charged with governance to allow for a good two-way conversation about the results of the audit. But the communication of significant findings from the audit may include requesting further information from those charged with governance that would allow us to complete the audit evidence that we obtained. And it will allow us to confirm that those charged with governance have the same understanding of the facts and circumstances and the findings that we found in the audit. And as we noted above, we have to communicate the qualitative aspects of these significant accounting practices. So as we know, financial reporting frameworks can be somewhat subjective sometimes. So they ordinarily allow for the entity to make accounting estimates and judgments about accounting policies and financial statement disclosures. And so if we have open and constructive communication about qualitative aspects of the accounting policies used by the entity, governance could help us to understand and also would understand themselves the acceptability of those significant accounting practices that are used by the entity. And in the appendix, we have a few topics that we could include in our letter as to fulfill this requirement. And you can go take a look at that section in the appendix of AUC section 260 if you want. But next, we're required to discuss certain accounting estimates and how sensitive they are to the financial statement. So in communicating with those charged with governance about the process used by management to formulate those estimates, we might consider communicating the nature of significant assumptions, the degree of subjectivity involved in the development of the assumptions, and the relative materiality of the items being measured to the financial statements as a whole. So if there are some very material estimates that are being made with very subjective assumptions, then we would want to include that in our letter and in our oral discussions with those charged with governance, how management came up with those estimates and how they affect the financial statements. Next, we need to discuss any significant difficulties that we encountered during the audit, and that might include significant delays in management providing us the information we needed, and any unnecessarily brief time within which to complete the audit. So if they only gave us a very short amount of time that wasn't really enough, we had to rush around to complete the audit, we would want to let governance know that. We'd want to let them know any extensive, unexpected effort required to obtain sufficient appropriate audit evidence. So if one of the accounts or transaction classes was significantly misstated and we really needed to dive in and do a lot more work than we were expecting in that area, we'd want to let them know about that. We would want to let them know about the unavailability of any expected information, any restrictions imposed on us by management, or management's unwillingness to provide information about management's plans for dealing with adverse effects of conditions or events that lead us to believe there's substantial doubt about the entity's ability to continue as a going concern. So if, unfortunately, any of these circumstances occurred during the audit, we'd want to let those charged with governance know in the letter that we send to them. And certainly some of these items could contribute to a scope limitation that would lead us to modify the auditor's opinion. And next, there are some other findings or issues that we might consider communicating to those charged with governance. For instance, if we became aware that an entity subject to an audit requirement is not encompassed in the terms of the engagement, then the communication of those charged with governance that our audit conducted in accordance with GAS might not satisfy the relevant requirements on them, then they would need to know that. For instance, maybe the entity needed to have an audit done under government audit standards or form guidance or other compliance audit requirements that we initially were not engaged to do. So we would need to let those charged with governance know about that. And so we have some more details here about communicating any disagreements that we have with management. And so we see that we need to communicate those details of those disagreements, whether or not we resolved the disagreement satisfactorily. So these disagreements could be over the application of accounting principles, management judgments about accounting estimates, scope of the audit, disclosures to be included in the financial statements, or wording of the auditor's report. And so disagreements do not include differences of opinion based on incomplete facts or preliminary information that are later resolved. So a disagreement would be something where we and management both have accurate and full information, and we disagreed about that item. It does not include incomplete facts, and we're not quite sure just yet whether we disagree with management or not. And so next, regarding uncorrected misstatements, we know from the requirements we're required to communicate to those charged with governance regarding uncorrected misstatements. And so they give us some more details about that here. It says we're not required to accumulate misstatements that we believe are trivial, but if there are a large number of individually immaterial uncorrected misstatements, then we may communicate the number and overall monetary effect of the uncorrected misstatements rather than the details of each individual uncorrected misstatement. So if we find some trivial differences in our individual work papers and testing and such, we don't really need to communicate those with management, but if either those trivial ones accumulate to a material amount, or if we find any individually material misstatements, then we need to communicate those to those charged with governance if we did not correct them as part of our audit. But typically we will discuss those misstatements with management and decide to go ahead and correct them. We might also discuss with those charged with governance the reasons for and the implications of a failure to correct misstatements, taking into account the size and nature of the misstatement judged and the surrounding circumstances and possible implications with regard to future financial statements. So if there's some uncorrected misstatements that we found and we don't really think they're material enough now to correct, but in the future periods it might affect future financial statements, we might communicate to those charged with governance so they're aware of the possibility in the future those misstatements might become material. And regarding the corrected misstatements, so these are the misstatements we found during audit and we discussed with management and decided to go ahead and correct them. We might communicate to those charged with governance those ones that we corrected. We also might communicate corrected immaterial misstatements, such as frequently recurring immaterial misstatements that may indicate a particular bias in the preparation of the financial statement. And next, regarding significant financial issues discussed or subject to correspondence with those charged with management. So examples of these matters might be business conditions affecting entity and business plans and strategies that may affect the risk of material misstatement, or discussions or correspondence in connection with initial or recurring engagement with the auditor, including, among other matters, any discussions or correspondence regarding accounting practices or the application of accounting standards. And finally, regarding our requirement to communicate written representations, we might provide those charged with governance a copy of management's written representation. So as we'll see in future videos, we're required to get a representation letter from management that they sign acknowledging their responsibilities. So we might provide a copy of that to those charged with governance for their reference.